Okay, so we're here with Steve Lawson of Infinite Passive Assets, and this is a conversation that I've been excited to have. First of all, thank you, Steve, for joining us on the Farmfolio vlog, episode
Oh, my
8.
pleasure.
And, when we first connected, I was really interested to hear your story because you come from sort of the publicly traded markets space. You were a wealth advisor for over a decade. And I want to start out by getting an idea of that journey. How was it that you came to? Because infinite passive assets is all about passive income. It's about diversification. The service that you provide to your network is all about diversification and all about passive income. So tell me about that journey. How did you go from, stocks, bonds, mutual funds, that sort of thing, to real estate, to helping people build, the passive income portfolios that you do today?
Sure. Well, a lot happened in 2000, 2001. And in retrospect, I figured out a little bit later more why I did what I did. But what I saw was I was advising people and they had accumulated a lot of money in the 90s. The stock market did really well. And then all of a sudden in 2000 and 2001, the tech bubble burst. And some people lost as much as half their money just in a matter of
Hmm.
months. And and that's when I decided, you know what, this isn't the market for me. There's got to be a better way to help people create wealth. And my specialty actually was people who were near retirement. And so they
Hmm.
would come to me saying, hey, I use this other advisor. He put me in these things and I've lost half my money. Can you fix it? Like I'm 64. I was going to retire in the middle of the next year. And now I don't have enough
Whoa.
money to retire. What do I do? And and so that's when I got out of that and got into real estate, which is what I did for the next 15 years. I show people how to invest in real estate because it's more stable, less volatile than the stock markets. But what it really boiled down to was I kind of have an issue with what a lot of people say is buy low, sell high.
Hmm.
Is you have to buy the right investment, you have to buy at the right time, and you have to sell at the right time. And what
Sure.
had happened with those people in 2000, 2001, they may have bought the right investment, they may have bought the right time, but they were being forced to either sell at the wrong time or postpone their retirement for several years.
Wow.
And both of those are terms. And so the buy low, sell high, I just don't like that approach that much because it doesn't work for so many people. The concept is simple, but the execution is nearly impossible. So I started focusing more on assets that passive cash flow. So you always come in. The real estate I bought in 2004. What happened when real estate went down in 2007? I kept collecting rent. The price
Sure.
went down, but I didn't sell. And eventually it came back way more than it was. And so just a few years ago, I said, I love real estate. That's good passive cash flow. What other types of passive cash flow can I find? And so,
Hmm.
after 15 years in real estate, I went on a journey to find some other passive cash flow assets, and that's what led me to agriculture and two or three others that I've invested in since. And that is really what founded Infinite Passive Assets. We invest in 6 different markets, all very diverse, and they all generate passive cash flow. So that's how I got to where I am.
Sure. Well, it's interesting, to think about where we are now, just from a macroeconomic perspective, because you mentioned the tech bubble, late 90s, and the people who just didn't, weren't able to time the market correctly, which, is going to be a lot of people, especially people who are looking, to retire in the next couple of years and who are looking at the market being so unstable, not just with the pandemic, but with COVID, excuse me, with inflation and high interest rates and sort of the whole landscape, I think is very confusing to people. So it seems very parallel actually to what happened with Farmfolio. Now that you mention it, our founders come from a principally tech and financial background, and a lot of the motivation was to achieve that level of diversification. After, except instead of the 2000, instead of the tech crash, it was the 2008, the great financial crisis, where people got wiped out. Maybe people who were looking to build more of a growth portfolio or people who were looking at retirement. They got totally wiped out. And, one of our founders went and said, okay, how can we gain access to an asset class where this isn't going to happen? Where we're not going to get calls from clients saying, hey, what happened to half of my portfolio? And so
Right.
the agriculture space made a lot of sense from that perspective. But I'm curious, that leads me to my next question, which is, how do you see, because you mentioned six different asset classes and achieving that diversification. How do you see agriculture fitting into that? What is it about ag and on a deeper level, because agriculture is a large space in and of itself. And so
Yeah.
to achieve diversification within agriculture is a different conversation. So, you know, I know that you've been on the road recently. I know that you've been traveling around a lot, looking at a number of projects. What is it about agriculture and what is it about farmland that fits into your perspective on passive income?
Sure. Sure. Well, there's two things. First of all, one of, as a matter of fact, if you ever read Robert Kiyosaki, he's pretty famous. Rich Dad, Poor Dad. It was
Mm,
his most famous book. But he talks about, right now, what is he investing in? Food, water, real estate. That's what
yeah,
people need. He said. Now he also invests in oil and gold, which are pretty
sure.
high in the stability list. He said, and that's pretty much it. He says everything else comes and goes. People will always eat.
Yeah,
They'll always drink. They'll always need a place to live. And for a few thousand years, gold has been a top priority, and oil doesn't seem to be
yeah,
going away anytime soon. And that's it. And so, just from a stability of, this is not something that's going to be a fad. Food is not a fad. So
yeah.
that's one reason I really like agriculture. Now, when I look, the other part is when I look at our overall, the six different things that we recommend, we break them down into what I call infinite income, long-term income, and short-term income. And so infinite income is money that can last forever. And so, if you get a dividend stock, you have a portfolio of dividend stocks, you're not selling shares, you're just collecting the dividends. I mean, that can last
Sure,
forever. You have a rental property, as long as you maintain it. Again, it could outlive you, 30, 50, 80 years down the road if you maintain it. And so, those things can last forever. And depending on how your agriculture is structured, so can your agriculture. Now, we have other
sure.
things that are long-term, like 30, 25, 30 years. Those are things like promissory notes. I have people who they bought a house, and instead of owing a bank money for the next 30 years, they owe me. And so that just it's passive cash flow, hits my bank account every month. Now, we also have some
Sure.
short-term assets, things that generate income for 3 to 5 years, maybe 7 or 8. Now, those have a higher return, but you can't, most people can't retire and live off that cash flow because most people are planning on being here more than 5 to 7 years. And
Right.
so the returns are phenomenal. But what we show a lot of people how to do is, if you do buy that, you buy that to generate high short-term cash flow that you then invest in the long-term and infinite cash flow. In other words, where everyone needs to eventually settle is in agriculture and real estate.
Yeah. Yeah, absolutely. Well, that, definitely aligns with our thesis as a company. I mean, it's a long game. When we came into this from the get-go, we knew that it was going to be decades, and that's something that all of our farm owners are conscious of, I think, is the fact that, you're not getting into this for a quick, flip. It's going to be about the passive income. It's going to be about the long-term appreciation, and I wanted to get a little deeper into that actually. When you look at an agricultural project, what are the things that you're looking for sort of from an ownership perspective, as you're bringing members of your network into this and as you're guiding people through, the steps of building these portfolios, what are you looking at specifically when you look at ag?
So a few things. Again, a lot of it has to do with length and what the ownership structure is. We do have some good investments in Southeast Asia. I like those. The returns are a little bit higher, but foreigners cannot own land in Southeast Asia. So all of those projects are leases. And so they provide 25 years of passive cash flow, which is good. And again, it goes up with inflation, all the same things as other agriculture, but there's an end point. And
Yeah,
so I wish that was forever, but it's not. So when we break things down into long, infinite, or the short term, those aren't infinite. Those are long term, which is good,
right,
but it's not infinite. And so
right.
agriculture investments where you actually own the land, I consider those to be, a higher quality investment, because it's not just going to disappear at the end of the lease. And so that's part of it. The other part is, how do they continue? And I have two examples of other agriculture projects. We have one where they plant the trees, and they said, this type of tree lasts an average of 25 years. And at the end of 25 years, again, I own the land. And so I have the choice. Do I want to chop them all down and plant new ones, sell it for firewood and start all over for the next 20 years? Or do I want to sell the land? So I have that choice, but at least I own the land at that point. The other one,
Sure.
it has more of an ongoing, even though those plants last, 20, 25 years as well, they have a system that around year 15, they plant baby plants between the rows. And as the baby plants grow, the older ones die out, and then they remove those. And so it's continuous. There's never a stoppage in the cash flow with that type of design. So there's a couple of different structures, but the perpetuity, the how long is that cash flow going to last? That's one of the main things that I look at when I look at opportunities.
Sure. Well, those are things that we were really conscious of as well, especially the perpetual nature of it, and being able to, bring farm owners to the table in that decision-making process, and saying, okay, 10, 15 years down the line, once these assets have appreciated, once you realize that, to be able to bring people together and say, okay, do we want to replant? We as farm owners, do we want to replant? Do we want to look at exiting, liquidating the property entirely? And then you have zoning changes coming into play, and the sort of expansion of urban areas and population centers. And so that was a big factor in our thinking. So it's interesting to hear you say that. But the last question I have for you, Steve, and something that I think is on a lot of people's minds, whether they're involved in our projects or not, is, we're moving towards 2024. We've had a difficult few years, not just with the pandemic, but with the repercussions of the pandemic. What do you see as the major challenges for people looking to build a passive income portfolio in 2024?
That's a good question. I mean, one of them is plan. I mean, do you have a plan for what you're trying to do? Because I've seen a lot of people that are like, hey, I want to build passive cash flow, but all they know about is, the stock market. It's like, well, I guess I can get some dividend stocks, and, those are paying, maybe 4% or 6%. And like, okay, if I need $60,000 a year and I need $1 million in my dividend stocks, oh, wait a minute, how long is it going to take me to get to $1 million?
Yeah.
A little bit, and then others. And so it just depends on what you're investing in. If you don't have, the right combination, and you don't understand how to put together a portfolio, it can be very challenging to try and build that passive cash flow in a reasonable period of time. The flip side is, okay, hey, you can build it super fast. I mentioned we have some of these high cash flow short-term assets. Well, that's great. I mean, we got to generate several of money. Hey, passive cash flow, I don't need to work anymore. That's great. But then in 3 years, it stops, or 4 years, again, you don't know. And so you can't just depend on that either. So some unknowns with, as you put portfolios together, unknowns with the structure and how that cash flow is going to work. And then the last part is just there's, the internet makes it so easy. It sounds terrible, but so easy to scam. I have found a lot of things that I thought were pretty good opportunities. I put money into them. Well, I did my due diligence first, obviously, but when you get in the digital space, again, away from the land, away from the real estate, and you start getting digital assets, there's just so much. It's a wild, wild west. You got to be careful. So that's one of the biggest challenges out there.
Sure. Well, we ran a piece about NFTs and sort of the collapse of that market. Not to, poo-poo anyone who may have seen opportunity there, but that's one of the reasons we wanted to be intangibles, and we wanted to be in the productive side of things, because it's just one of those things that is, like you said, it's infinite, it's perpetual. And so
it's funny you say that. Just real quick, because I had someone literally last week, and I was talking to him about agriculture investing. He said, that sounds great. Have you thought about putting it into an NFT and selling it that way? I'm like, that defeats the purpose of having a physical asset.
Let me give you a digitally encrypted JPEG of some fruit.
Yeah,
Might not, we'll see how that, we'll see what Walmart thinks of that, see what our retail clients think of that.
yeah,
But, a sort of an addendum to my previous question, and maybe to end on a more positive note, there definitely are challenges, like you mentioned, and part of it is, macroeconomic factors, interest rates, et cetera, et cetera. But there are also opportunities. So I'd like to know, where you see the opportunities in this window that's coming up next year, and sort of in that short-term time frame.
yeah. Well, a window that I'm hoping to reopen soon is real estate. It's been tough the last couple of years. The prices have gone up enough. Yes, rent went up, but when you factor in the higher prices and the higher interest rates, the positive cash flow just isn't there. And so
Mm.
the most real estate prices have been pretty flat over the last 6 months or so, at least here in the U.S. And interest rates have gone down quite a bit the last 6 weeks. It's approaching tolerable. And, if the prices
Well,
stay flat and the interest rates keep going down, that might be another opportunity to start reconsidering real estate next year. Agriculture. Again, I think it's one of my favorites. It's the one that, as I talk to people, they see the most. It's the most logical. You're like, people are going to eat. It goes up in price when there's inflation. So
yeah,
the 2022 is still fresh in their minds. Like, man, I got killed at the grocery store. It's like, well, wouldn't you like to be on the other side of that? And
sure.
maybe inflation goes back up again. At least if you're investing in agriculture, you're benefiting from it instead of
Yeah,
just being a victim of it. And so,
yeah.
agriculture is one of the better opportunities. There are a few others, just in general, but it's there's just so many different things. There's just a lot of due diligence and research to find the good ones and take advantage.
Yeah, yeah, yeah. Well, thanks so much, Steve. It's been a very interesting conversation. I've been really looking
Good.
forward to picking your brain a little bit, and I hope everyone out there has found this insightful. Moving into 2024, I think people are going to stay focused on that diversification. The passive income dream is something that I think a lot of people share, and it's great that you're able to guide people towards that. So, thanks for taking the time to talk to me today, Steve, and look forward to chatting
My
with you in the
pleasure.
future.
Awesome. Thanks so much,
Take care.
Erik. Talk to you again soon.
Bye bye.